All right, get going here, guys. All right, last night's session on U.S. markets, very, very strong. Again, following through on a very strong day that we saw out of Europe yesterday. Europe, I think across the board we were up, 1.2, 1.3% probably on average. The FTSE really was a big leader yesterday with the mining space driving things, the IBEX and Spain as well, trading very, very strong. Italian markets very strong. Basically all the European markets running. The German DAX maybe a little bit of a laggard on the day, but it's probably exhausted from how hard it's run. We had a big bounce in the oil price again yesterday. Bounced up about 1 point in the U.S. session. We were up 9+% on light sweet. We finished up, if I'm not mistaken, closer to 5.5%. We're still only at 52.50 in light sweet on spot. Brent crude, we're trading around 58. But we've had a nice bounce nonetheless. I think we've actually bounced about 20% off the lows. And so that's really driven a major short squeeze, I think, in a lot of the diversified miners, and a lot of the oil stocks, and a lot of the cyclicals related to those stocks. And to see things like Caterpillar, ExxonMobil, Chevron, everything like that really rallying hard here. You saw for a second day in a row, Sasol go totally ballistic, continue on in the States as well. We did have factory orders for December, which declined by 3.4%, which was more than expected. We continue to see that data set in the States come out just a little bit soft. In Asia, we had a nice follow through out of Australia again. Another big day out of the miners there. We did have the Nikkei finally go today. The Japanese yen showing a little bit of weakness today. Pretty much every market up except for Shanghai. A little bit of nervousness around some of the property stocks again, I think, but financial stocks actually traded a little bit better on the day. And then we've got on our chart of interest today, we've got the Germany 10-year yield dropping below the Japanese 10-year yield. It's the first time in history that that's ever happened. I think that's quite spectacular when you look at that, considering where we were only probably 6 months ago. I mean, that's just incredible. We've got Japanese 5 years that have been bouncing in and out of negative territory. I'd obviously assume Germany 5 years will be doing the same thing, rather soon. And then we're moving into a totally different world right now of, insanely low interest rate environment, which I think is potentially creating a little bit of a bubble in certain of the equity markets at the moment. With one of the stats that I read over the weekend, or yesterday, was 80% of the U.S. Companies that have reported thus far in this earnings season have reported negative earnings guidance going into the first quarter period. So, throwing that kind of statistic out there and seeing equity markets that are running like that, there's a huge divergence in the actual equity market and the EPS of the index. So I think that that's something that is unsustainable in the long run, but in the short run, that can get a hell of a lot bigger. So we just got to keep that in mind. Be very careful fighting that kind of momentum that we're seeing in global equity markets at the moment. Right, this morning, corporate action, we had ArcelorMittal trading statement. Came showing a 38-cent loss per share. Expectation was for 33. And we had Vodacom as well with this third quarter sales release. Definitely looking soft here. I mean, you look at group revenue numbers that were down. Excluding the MTRs, the interconnection rates, they're up 1.5% only. So I think still a very soft number overall. The only good number looks to be the data revenue number, which I think is is a nice looking number at up 20%. Other than that, I think everything may be a touch soft. ARPU up 2.7%, but year on year up 2.7% for year on year, but down 1.1% for the quarter. So that's it's a bad momentum that Vodacom's starting to generate over the last two reporting periods, and I think that you may start to see the stock get punished for that relatively soon. All right, let's move on to market data. We've got we had the PMI numbers for services PMI numbers for Japan and for China, both looking a little bit soft. We've also got the same number here 15 minutes after the open. We're going to see that across the entire Eurozone. We're going to see retail sales in Europe, and later in the States we've got a slew of numbers. We've got MBA mortgage apps, we've got ADP employment change, services PMI as well, and crude oil inventories, which crude oil inventories could be a very, very big number at 5:30. It's just after our bell. All right, let's get into the maps. First thing that I wanted to have a look at, it's already up here. This is the Aussie chart. So you can see here, let me actually back this out just a touch more so we can see the bigger picture. I mean, basically, we ran incredibly hard into, I actually should draw this on here. We ran incredibly hard into more or less the end of the year last year. We had a big pullback into September, October, and then we ran big time right up into this level that I'm showing you here, which was at 45,600. We broke through that yesterday, and now we're really looking like we can clock things to the upside here. So we managed to hold again in January down here around 42,000. And as we sit, I would expect that we're going to come up and test resistance somewhere up here at around 46,700, if not even the all-time high. So I mean, for me, it's a very big channel that we've broken out of. I think there's potentially a huge move to the upside according to the charts here. So just keep that in mind. If you look here at the big picture, this thing's looking very bullish, and you got all the indexes which have been breaking out as well, outside of the S&P. If we look at the FTSE as well, the FTSE's right there to make this breakout. I mean, this morning the FTSE's called up about 25 points. That'll put us on a breakout here in the FTSE as well. We tested the number intraday there yesterday. You can see, I mean, if I back this out more, is also going to show us how important this level is. I mean, we touched this level going all the way back into the very beginning of 2013, if you see there on the chart. But this is an enormous level on the FTSE, and that level this is spot. This is 68.85. We get through 68.85. This thing's definitely probably got a very big move to the upside. And you're seeing, obviously, right now we're being driven by the miners. I don't know how sustainable that is, but the bottom line is, this pattern actually looks somewhat similar to the German DAX pattern where we broke out from. I mean, we don't have the same sort of inverse head and shoulder, but very similar type wobble here before we broke through huge resistance. So just watch this closely. I mean, we could have another 500 points to the upside, 10% or something, if we break out here on the FTSE. All right, the next one I'm going to have a look at here is Tiger Brands, which I think is just broken out of, it broke out maybe 5 or 6 sessions ago. You can see there, but we've consolidated over the last few days, and as of yesterday, we really kind of popped out the top of that. I wouldn't say pop, but we got through it. We actually tested at 400. This thing goes through 400, which it looks like it's going to. I think that we've got another 50 Rand of upside, call it 40 Rand of upside if we get through 400. So I think the target here is as much as 440 Rand, which is quite spectacular considering this thing was trading under 300 only 6 months ago. All right, we'll look at Bidvest. Bidvest yesterday came up, for the last 3 or 4 sessions. It's tried to make a breakout here through previous highs. Couldn't do it on a closing basis, and then yesterday kind of failed hard on the back of that, looking a little bit double topish there from the 324 level. So, I wouldn't be surprised if this thing does have a nice correction from here, the way that it, kind of tested hard for a couple of days and was rejected off of that 324 level. All right, another thing that I just wanted to point out here real quick before we wrap things up is a couple false breakouts that we had in some of the gold shares yesterday, and then the subsequent reversal that we had, in some of them even further into the U.S. session. So yesterday we were trading at 69.5 in Goldfields, looking very much like we were going to break out if we could get a close up there. The other day we traded up to that level, I would say 2.5 weeks ago. Failed it quite hard, ended up trading sub 60 only, maybe a week ago, and now we're all of a sudden back up testing this level. Yesterday, again, looked like it was going to break out with a close through 68, and actually failed it quite horribly into the close. What's interesting to me is that first of all, the market's gone totally risk on here, which I think is a little bit negative for gold. The big thing in my mind is that the gold price over the last however many weeks or months seems to me like it's been moving very inversely to the price of oil. And now that oil's starting to make a move to the upside, you're starting to see gold weaken a little bit, along with obviously the risk-on trade. I wouldn't be surprised, especially after the failure yesterday when they were looking like they were going to break out. Goldfields, we can also look at Sibanye. I wouldn't be surprised. Sibanye was just a horrific failure trying to break out here. And absolutely just imploded into the close, fell even further in the States. If this thing drops this sort of level here, that'll be a massive failure and reversal. So if it can get below 30 and hold below 30, then I think that Sibanye could really get hit hard. And the same with Goldfields. I think these things have run incredibly hard. I think that they could see some short-term correction in all the gold shares. And that's it for today, guys. Thanks a lot.